The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Futures are a bit soft as some overseas markets show red arrows. Traders are awaiting signs from the European Central Bank meeting on Thursday and the U.S. jobs report due out on Friday. Will last week's volatility continue? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are a bit soft this morning. We are seeing a little bit of corrective action in world markets. Pressure in Asia. Europe looks soft across the board. In terms of headlines this week, we do have ECB on Thursday, and talks that the sequester may really weigh down jobs on Friday. Friday. So right. Scott, how do you think headlines are weighing on the markets right now?
I think a lot of individuals want to see what the jobs report will be Friday, because all weekend long they talked about the sequester, and that perhaps by this going through in the automatic reductions that it could take away 700 to 750,000 jobs. So people reading that probably don't feel so good about it. And then they also talk about it taking away a percentage point in GDP. But unfortunately, Brittany, these are things that we have to do. We have to have some tough medicine. We have to have some, controls. Unfortunately, Washington itself couldn't come up with some kind of balanced approach where maybe they cut some pensions, some entitlements. I think the last thing they need to cut is Social Security. That's what they're saying on Medicare. It's more like, what about those 75, 85% guarantees for life and insurance for life versus, the small Social Security payment that people earned by participating and putting money in, during employment.
So if we go to the S&P, how can we look at the key levels there to give us a clue about which way the market might go this week?
Well, we've been in this wedge formation. Some people are calling it a megaphone. So if we take a look at the chart here of the S&P, you will see that after riding a really nice accelerated trend, we finally had this potent engulfing bar about a week and a half ago, and that had me switch some gears to more tactical. From there, a little bit of a bounce back, and then boom, that was a big bar. This was a pretty scary bar. You didn't know if it was going to lead to a big time correction or if it would be sustained. And then we had that small red dog reversal. If you remember, we traded below 149, came back above, went right back to the upper end of the range. So the question now is, do we see some commitment in the upper end? Can we continue to hold and go sideways right around here? Friday's low was 150.40. If we could hold above in this area for the next few sessions, I do think that raises the probability that we could break above and continue to the upside motion. If this gives way, it might be back into this choppy two-way trade. But within this two-way trade, there's a lot of strong stocks, a lot of weak stocks, a lot of things to do.
And how are you preparing for the chance that we might have the kind of volatility that we saw last week?
Well, I put back some positions. I think last week I went almost all to cash and I was just trading, but then some stocks have been acting better. So I wouldn't say I'm in portfolio approach, but I do think right now I have 6, 7 longs, and I do have some spiders on as a short. And at different areas of the range, I'm adding to my hedges so I could take advantage of it. If we wind up breaking below that, midterm support in the spiders, perhaps I'll add to the spiders, and if my positions aren't acting well, I'll get out of the way. If we hold here and I see more things acting well, I'll put on some more positions. But I'm not going to be opinionated. I'm not going to have probably too much size, but I'm going to stay with the tradable action and let the markets come to me.
All right, well, let's check the temperature of the various sectors and maybe see which ones we can look to for clues about which way the market might resolve this week. Let's start with the Cubes, which was able to rally 0.4% on Friday, closed above its key moving averages. Now, we are obviously seeing a lot of weakness still in Apple, but there's still a lot to like in this group.
Yeah, and I think you just can't really trade the Qs itself. If you're trying to make money in the Qs, you're probably banging your head against the wall. If you want to look at the chart here, it's been a monotonous range. Ever since even the start of the year, look at this. It's been trapped in this 2-point range. Yes, it's holding the 50-day. Yes, it's holding this gap, but there's been no movement. You had to be in individual names in tech, which we'll get into later. But I guess if this were to start taking out 68 to maybe 68 and 26, there could be better action. And if, God forbid, the Qs in technology technology started to, get in the mix a little bit better, and maybe Apple acted better, but who knows? We'll talk about that later. It's something to go with, but I would not, if you're looking to get tech exposure, do not be just buying the Qs because you're not getting anywhere.
And how much will you be looking to the cubes for clues about market direction?
Not the Qs itself, just in particular, particular tech names.
But maybe you'll be looking at the home builders, which led the market up on Tuesday and Wednesday. The XHB is now back up above all key moving averages. So how much will you be paying attention to the home builders this week?
This ETF is more tradable. At least it moves around, and there's been some trends that you could look at here. If you look at the chart of the XHB, you will see here was that accelerated trend. Okay, and I remember on this day, some guys got short as it broke, some, sold some, and then you had a nice move to test the more gradual trend, the more longer term trend. This is a longer term trend that some people follow based on their time horizon, and this is the shorter term trend. So here it held. This was a nice spot. I think I got long a little bit here, and almost this is reminding me a little bit about the spiders right now, where you have an intermediate support. So I would say the longer the XHB holds above this 2782, the higher the probability that at some particular point maybe we can continue back to the upside. I'm not sure how long it's going to take to hold this, but if this starts to give way, then all of a sudden, you got to see if this bigger support holds. So I think traders will trade this a bit more and look to some of the individual names within that group. But overall, it's acting better and it's trying to stay in the game. Any
highlights in that group that you like right now, names?
I haven't been looking at any individuals, but off the top of my head, I would say you look at like Lennar. Here, this has been a stronger one. This did hold, the gradual support, but it's failing a little bit into resistance. So, I would say that looks in line. Let's take a quick look at HOV. It looks okay. I think at this point, unless you're trading that group in particular, I would almost just go with the ETF there because, you might get better bang for the buck.
All right, well, let's check in on retail. The XRT was able to pare most of its losses by the end of the week. So how do you think the group is positioned heading into this week?
I think in the fourth quarter, or December, a lot of people started to get away from the retail names, because they were out of play. And now I see some money rotating to the RTH and the XRT. So if you take a look real quickly here, this is the XRT. This is when it broke above this downtrend, made a high, and became very choppy into this. But it did hold a 50-day. It's holding a bit higher. You look here, right into this area. If it starts getting above this, 67, 69, perhaps it can continue. You look at the RTH, it actually looks a little cleaner. This looks like it's just starting to break above this trend line here. So, this particular ETF, I think, has motion, and there is some leadership there. And I think if you want to talk some names within this group, because I've been looking at some, I think Walmart is acting a little bit better. You look at Walmart here. This was my hype. This was my retail stock of the year last year, and it broke above this 62. Put it on top here. Here was your false breakout. It's been correcting, but now it seems like it's trying to get above this area. I am long some. If it were to get above 72, I do think that it can continue to the 74 area. I know Target came out with numbers. At first, they didn't look great, but it absorbed it. Looks good. Looks like it's heading towards highs, and even something like maybe Nike. Nike is holding in there. And it looks like it has this like triangle type wedge pattern where it woke up a little bit on Friday. If it gets above 55, I think that can continue. So there are things to do, and it looks like some retail names are perking up.
Well, last week we could have looked to the financials for clues about which way the market would go, and the XLF added 0.3% on Friday and ended the day as one of the day's top performers. So last week we talked about names like Goldman, JP Morgan. Are these still the names you're paying attention to heading into this week?
Yes, and I think Goldman, after giving you some nice action, like you could have traded it from the short side, you could have played a bounce. Now I'm going to look at Goldman to see, a little bit of market direction here. Okay, here was that long accelerated trend line that wound up breaking to the downside. Nice little shorting opportunity in there. I think I even made some cute money short there. But now it's trying to hold this support. So I think this is going to be key. Can Goldman stay above this 147 and go sideways? If it can, and all of a sudden it starts taking out this 3-day resistance, it starts taking out this 152.40 and it could hold above it, then you'll know that the market is actually getting maybe away from its corrective phase, which we just saw, and acting better. But if we put in we have a high here, another lower high. If we put another lower high here, there's a chance for this to continue.
And the industrials was one of the strongest sectors, but underperformed the market on the last 2 sessions. So what will it take for industrials to pick up steam again?
I think this is just it still looks good. There's still individual names there. I don't think many traders are like watching the industrials so close, but it is important. And if you look here at the industrials, the XLI, you will see that it did hold above the 50-day. It did hold the middle of the range here, closing near the highs here. So I do think that this is in the game and worth watching. It might just take a little bit of time here. I'm not that involved with the industrial names. GE was one of the favorites that I had for a while before. Finally, getting away from it. If you guys remember, we started positioning right around here on this nice wedge pattern, and I do think on this day is when I got away from it. But overall, this actually looks like it's trying to wedge again. So we'll see. I might even look at this. If this starts getting above 23.46 and holds above it, I might put it back on, considering that it just had enough corrective activity right in the midst.
All right, well, coming up, we're going to go in the trenches with high beta tech, where there's lots to like and, yes, some not to like so much. So stay tuned. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, where there's lots to like, namely LinkedIn, which continues to be best in breed, a go-to name for active and traders. So what are you watching when it comes to LinkedIn right now?
It's good to see that it can continue to go up. If the market was so weak, they wouldn't even let any names make new highs. And I think traders, every time the market's down, they look to this name for cash flow. So you could approach this many different ways. If you've been involved since or before earnings, congratulations. You probably have a macro approach. If you traded for cash flow, there's been trades there. And also on an intermediate level, you look at it now, it looks really good. Here was that big earnings gap. I talk about this all the time. If it doesn't get filled, there's power. Continued up, went sideways. And if you remember last week, there was a nice cash flow trade, above this 160, 170. Then it paused, and it went again. So at this particular point, it's still trending above the 8-day. This has been best in breed, and a great stock pickers performance vehicle if they chose this for the last year or so.
Right, and another great name right now, of course, is Google. Continues to be a market leader. It's been grinding higher since earnings on January 23rd. So how long can it run for? Where might we see some resistance?
Well, I think some traders are going to be watching it very closely this week because, you get that $1,000 price target like it had a week ago. Okay, and that's almost been like the kiss of death. Every time that happens, it's like, boom, that means, wirehouses are selling it and the move's almost over. And this one's actually, it was holding above 795, 800. So, a lot of us started to look at it again, see if we could hold it and get some kind of momentum move. So if you look now, if you're an investor or a macro investor, congratulations, you got paid. If you look to get involved after this earnings gap because you don't hold through because of earnings risk, you also follow a nice trending market or a trending stock. And if you look here, what I want to show you is another nice pattern. Okay, this is what you call a bull flag. And at this point, it's always hard to sink your teeth into a lot of size at the highs here. But if the market wants to go positive today and make new highs, I would think that this one will break above this 808.50, and it could be on its way to 820, 840. I'm in some. I'd love to see it go positive. I'd love to be able to add through 808ish and make some additional cash flow. It's been trending higher, and it looks like it's in the game.
Well, not every stock can be LinkedIn or Google. Amazon has been able to pare most of its losses from Monday. It saw 3 consecutive up days, so not too bad, but also not too great.
Yes, it's like in that middle ground where the bears are a little bit on edge because it's not as weak as it looked a few weeks back, but then the bulls aren't really getting clear-cut signals to say coast is clear. So if you look here at the chart, you'll see why. First, after the earnings, it didn't break above that 284 and had some nice corrective action. I remember getting spun around here when I was short versus the 50-day, and then this igniting bar took it back where another faulty breakout. So you had a faulty breakdown, a faulty break up, hard for any trader out there. And now it's hovering right back here at this trend line. Maybe this time it's ready. Maybe this time will be different. Anyway, 267 is that level. If we can get above 267 and show some power, I think a lot of traders will be watching it. I'll have it on my radar. I have no position now, but maybe it'll be good for a quickie.
Well, and then there's Baidu, which is typically the laggard of the group, but outperformed the market on Friday. So how intrigued are you by Baidu's setup right now?
It's like entries and exits matter, and this one has been just trending and trending lower. And at this point, it went to macro support and held it. So, to call that a win for Baidu right there. There's been this was actually a really good shorting vehicle, after earnings. If you look here at the chart, you'll see we talk about tactics and look at this gap down after earnings. And then remember we talked about this inside range here, whether it could fill the gap or not. And when it couldn't, some guys made some nice money short. But then you look here at this macro support, it didn't break it, so some shorts got scared. I don't know. At this point, I'll keep it on my radar, but I'm not so excited about it. Traders on Friday made some decent money if they saw it poke its head up on Thursday. Friday it had a bit more follow through. But this 94, 95 area is going to be big resistance. Let's see how it deals with that. I guess it has a little room left.
And on Friday, you called Apple a screaming short. Obviously, the stock has continued to be very weak, but would you hesitate before calling it that again right now?
Yeah, you know what? I don't really remember the screaming word, but I was like, if it breaks 435, I'm sure guys trying to position will get out. Guys on the floor will try and short it because it's the key level. Whenever you get to key levels, you have to take your opinions out of the way and say, I know it's Apple, but who cares? Stock couldn't rally when the market rallied. Tim Cook went on Investor Day, didn't say anything so different to impulse new buyers. And then, you have a level break. And I tried to be shorted on Friday. I made peanuts, but some guys who stuck with it made more money. And now you look at a level breaking. So what do? You get out of the way and figure out what the next level is with some trades along the way. You look at the chart of Apple and you'll see, here's that head and shoulders top. With 703, this is when it broke the key moving average of 21. Here's it broke the 50-day, and then from there, methodical move to the downside. And actually not methodical, pretty fierce. Okay, you did have 1 or 2 long trades along the way. Here was at November 16th. Red dog reversal, but it got contained by the downtrend. Here was that descending channel, got contained by the downtrend, and then this was, we were looking at it very close here. I wanted to be long. I tried being long, and when the stock doesn't let you be long, you got to get out of the way. It never went above this, 455. After that 4-day move, remember that? We talked about it holding 463. It didn't do that, and then finally it broke below this recent range. I guess you could say if something happens and it gets right back above it quickly, it could be okay. But at this point, what I'm going to do is I'm not going to be that enamored with it. I think I traded it only once or twice on Friday. If it were to, break the low of 429.98, it could easily continue to the downside. Use that as your pivot. If you want to map out some bigger support, so to speak, just so you can be prepared with levels, it's already in this gap. This low support here is 419, so people are talking 418 to 420 as another level to watch. But ultimately, there's really much bigger support below 400. So, if I were Tim Cook, if you bring it back to me, I would be getting on the horn or meeting with the board members again and try and get some kind of buyback in the works or announce that dividend before all of a sudden that 3 handle turns into a magnet.
All right, it's hard for a lot of traders to stay away from Apple. Is it still difficult for you?
The long setup was taken off the table, I feel like, after the investor relations meeting or investor, that whole conference that they had. So for me, it's almost like when Apple's in play, you almost can't do anything else because there's opportunity there and it's so whippy. It's almost less stressful when Apple's kind of the setup's not there, because then I could play things that have been acting easier to the upside, whether it's LinkedIn or Google or Netflix or the bank. So, at this point, I don't think anyone has any anxiety that they're going to miss a bottom in Apple, because it'll show it finally if it perhaps happens, and it just hasn't happened yet.
All right. Well, let's do some quick hits here. Let's talk Blackberry, which is in a tight trading range last week. Is it in a buyable area now?
If you look at the chart here, I tried being long it the last day or so, or the last 2 days. I know Swirl has been trying to buy it in the lower end of the range, but it's every time it looks good, it fails. So for me, I've been trading it, but I'm not so enamored with it. I think this could be your line in the sand on Blackberry right here. I personally don't think the 10 is going to be anything worthwhile. I think it's a troubled stock overall. But I guess trade averse 1275. If it breaks 1275 and breaks this recent support, I think you got to get out of the way. If for some reason it blasts through and has to really blast through 1378, maybe I'll get interested again. So we shall see.
All right, Bank of America outperformed the market on Friday. What's its upside potential look like here?
I think just, as long as it holds 11, I think you should hold it. If it starts getting back above 1140, maybe, get to the upper end of that range, closer to 12.
All right, Facebook had a nice gain on Friday, 2%.
Yeah, well, this one finally, since earnings after being pressured, the last 2 days gave us nice entries. And, for me, I've talked many times saying I don't think the highs of the year in Facebook are in, which is 32 and change. But I've been taking some pain and I got out. And then finally, on Thursday, you saw a red dog reversal. Let's go to the chart, which I'll show you right here, which was this day. Okay, that was when I got back in Facebook, when you saw that volume. And then it gave you another trade when it broke this small trend line here, above 2730. So I would say I'd love to see Facebook now at least stay over 2730 to 2750, just to show some commitment to this. And then I would say at some point, if it could, get above, I know it's a little bit of a way, this 2910, then perhaps it gets in better motion, gets more eyeballs. I know they announced some kind of conference for March 17th. Maybe that's helpful. But I think overall, at some point, people need growth. They need something that's going to have some kind of, capital appreciation. And at this point, I know the valuation is high on Facebook, but I do think that people would like it to go higher. Institutions have a lot of money involved, and we'll see. So right now I'm involved in it, and I'll stay involved in it as long as it holds above 2730-ish.
Okay, all right. And finally, metals have been out of play, and the GLD, no exception.
Yeah, this, two different time frames. Intermediate, when it broke the wedge, it's at 161 on the GLD. That was your out. That was a spot to maybe get short. Now it's coming into macro support. It's trying to hold that 158, 160. It's above that. I'm sorry, 148 to 150. Look at the chart here. I think if you're a macro investor in the metals, okay, which you guys have been yawning, saying, oh, it doesn't matter, it doesn't matter. Meanwhile, I'm sure it would have been nice to have a hedge on when it broke this area. But at this point, it's acting pretty weak. And here's bigger support. Here's that 148, 150 going sideways. It's making its way towards there. This better hold, guys. If this doesn't hold, you got to go to your weekly chart, because on your weekly chart, this support gives way. No reason why it can't get down to 139. And there'll be better ways to approach it versus closing your eyes and saying that it'll go up at some point.
All right. Well, with all the headlines and events we have going on this week that we discussed earlier, what's your focus heading into trading this week?
I want to see if strong stocks continue to act strong. I want to see if other sectors get a little bit better, or I want to see if that middle ground of this new wedge type pattern gives way. If that gives way, I'm going to have to become a little bit more risk averse and pull back to more tactical, because I think I went very tactical early last week, and then during the week the stock action actually was a little bit conducive to putting some things back on that are acting well and acting better than the market. So as long as that continues, I'm going to continue to try and manage my positions around price patterns and have a hedge on at areas of the range. And what's good is at least things are trading on their own. Just say what's metric, whatever the big word for me to say. Trading on their own merits.
Oh,
I'll
there
just
you go.
simplify it. Simplified. Cotton napkin technician. So if all of a sudden that changes and everything just goes down together or up together, then I'll change. But right now, there are stocks showing relative strength, sectors showing relative strength, the same way there are stocks showing weakness. So just pick and choose your battle, choose where you want to live, and take it slow if you're not seeing it.
All right, that's your morning call for this Monday. Happy trading, everyone. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.